So, PayPal. For what feels like an eternity, this stock has done, well, a whole lot of nothing. It's been stuck just chopping back and forth between about 50-something and 80-something dollars a share. A lot of people like myself have bought it, got bored and left. So the question today is it finally going to change, or is it just going to repeat history once again? Look, if you're short on time or simply refuse to listen to a random guy hiding his face in a small YouTube channel, here is the main takeaway. PayPal is finally making some genuinely interesting moves with a new platform they call PayPal World and some clever uses of crypto that could fix some of its deepest problems. The issue is, its main business, the branded checkout button you click online, is slowing down. The entire investment case right now hinges on one question. Can this new stuff grow fast enough to overcome the weakness in the old stuff? Hey, for those who are new here, my name is DataCat, and yeah, this channel is pretty new. For years, my entire world was building models and running analysis inside a Fortune 50 company. I was a corporate slave, basically. I traded that life in for, well, a keyboard and a laser pointer. My cat seems to appreciate the upgrade. I'm not here to brag or sell you a course. I'm just here to look at the data and the story behind the numbers. If you appreciate that kind of straightforward analysis without the usual YouTube hype, maybe consider subscribing. It would really help a small channel like this one find its footing. Alright, so let's get into the specifics of what's happening with PayPal. Why are we even talking about it now, in September 2025? The story really starts with their last earnings report for the second quarter. On the surface, both revenue and earnings per share beat Wall Street expectations, and their total payment volume, which is just a fancy way of saying the total amount of money that moved through their systems, was up 6% to about $443 billion. But then you have to look at the mix. The star performer was Venmo, which grew its revenue by over 20% again. That's strong. The problem child was their main branded checkout business, which slowed to only about 5% growth. The company also pointed out a couple of headwinds. They flagged a 2-point drag from interest rates, which cost them about $125 million. Basically, when rates are higher, PayPal earns more interest on the cash balances you and I leave in our accounts. With the market now expecting rate cuts, that income stream gets smaller. It's a direct hit to their profits. Now where the story shifts from meh to okay is in their company strategies. This is what the big funds and analysts are actually focused on. First is something they're calling PayPal World. This is their plan to become a universal adapter for digital wallets. They announced they're starting to connect PayPal and Venmo with other massive global payment systems. They mentioned partners like Mercado Pago in Latin America, Tenpay Global in China and UPI in India. If they get this right, they could extend their reach to over 2 billion wallet users. This is how they can grow their branded business without just getting into price wars with competitors. It's a subtle but very important strategic shift. Second, they're making a real push into crypto. Not for speculation, but for the technology itself. They launched a Pay with Crypto feature that allows for almost instant settlement for international transactions, and they claim it can save up to 90% on transaction fees in some cases. They're using the plumbing of crypto to make moving money cheaper and faster. It's a surprisingly practical, almost boring use for the technology, which is probably why it has a real chance to work and actually save them and their merchants a lot of money. And finally, there's the user engagement piece. They did a deal with the AI company Perplexity. PayPal users get access to Perplexity's AI browser and a 12-month pro trial. This is all delivered through a new subscriptions hub inside the PayPal app. It's a smart way to add value and keep you inside their ecosystem. It's like when my cat discovers a new comfortable box. Suddenly he has no interest in leaving that room. PayPal is trying to build a very comfortable box. So you have these new initiatives set against a tricky economic backdrop. The market is betting on a rate cut this month because the economy is cooling off. That's a double-edged sword for PayPal. As we said, lower rates mean less interest income. But easier financial conditions could boost online shopping, which is their lifeblood. This brings us to the core question. Is this a real pivotal moment? The argument for yes is pretty clear. You have real product momentum aimed at growth. PayPal World, the crypto rails, and the continued monetization of Venmo are all tangible things. At the same time, the company is showing discipline. They're growing their transaction margin dollars faster than revenue, which means they're focusing on profitable growth, not just growth at any cost. And they're buying back a ton of their own stock, funded by very strong free cash flow. Oh, but hang on a moment. The argument for not so fast is also compelling. That branded checkout growth is still slowing down, and competition from Apple Pay and others is relentless. It's a constant battle. And their other processing business, Braintree, is basically flat as they cut out low-margin customers. Plus, if those rate cuts are happening because the economy is genuinely weak, e-commerce could slow down significantly, and that would hurt them badly. So, my take is this. For the first time in a long time, PayPal has a credible path to getting its stock moving again that isn't just based on hope. The investment thesis is that their pivot to profitable growth, combined with these new ecosystem plays, can stabilize their business and boost their margins. The catalysts you need to watch for are clear. 1. Does that branded checkout growth stop slowing down and start to re-accelerate? 2. Does Venmo keep up its 20% plus revenue growth? And 3. Do we see real evidence that PayPal World is bringing in new volume from those international partners? Personally, I'm not buying the stock right now. I think there are other companies in the financial technology space with a clearer path, but I'm watching it. This looks like an execution story now. The plan is on the table. So a plan is just a story. We also have to look at what the price is telling us. The chart holds the other half of the information, and what it's showing is a coiled spring at a crossroads. The big picture here is that the technicals, the chart and the fundamentals, the business story, are telling the exact same tale. The stock is stuck because the market is stuck. It's weighing a pretty bearish present against a possibly bullish future. My metrics label the primary trend as sideways with low confidence, which is a technical way of saying we have no idea where this is going next. Let's break down the two competing stories the chart is telling us. First, the bear case. This is the weight of what's happening right now. The technical weakness is pretty clear. The stock is trading below its 20, 50, and 200-day moving averages. Think of those averages as currents in a river at different depths. Right now, the short-term, medium-term, and long-term currents are all pushing the stock downstream. The momentum is described as decelerating down, and another indicator, the weekly MACD, is bearish strengthening, which means not only is it heading down, but the downward pressure has been getting stronger. This isn't happening in a vacuum. This is a direct reflection of the market reacting to that slowing growth we talked about. The data shows a distribution trend in volume. That suggests that the bigger institutions, the so-called smart money, may have been using any small rallies to sell their shares. It's like seeing the smart cats quietly leaving the room before the vacuum cleaner turns on. They sense something they don't like. But that's only one side of it. Now for the bull case. This is the story of potential energy building up for a reversal. While the trend is weak, the stock isn't just falling off a cliff. It's holding above a key long-term support level, right around $67 to $67.50. The fact that it's been in this range for so long without breaking down for good suggests a base might be forming. And we're seeing signs of extreme indecision. The daily price candle on September 8th was a doji, which is basically a stalemate between buyers and sellers. It also happened on the tightest trading range in 7 days. This reinforces the idea of a pause. It's like a cat stalking a bird. It gets very, very still right before it pounces. The market is very, very still right now. This is where that coiled spring idea becomes so important again. The market is waiting for a reason to move. A positive signal from the Federal Reserve in their upcoming meeting could be a huge tailwind. Any good news about those new strategies? The crypto payments, the Perplexity deal, Venmo, could be the spark that ignites a breakout. And while the stock's performance has been poor recently, the 3-month Sharpe ratio is negative, meaning you've been compensated poorly for the risk you've taken. The current setup is interesting. The risk to reward ratio from this price level is over 7. That suggests the potential upside to the next resistance level is significantly greater than the downside risk to that support level. So what are the actionable insights here? What should you actually be watching? First, watch the squeeze. The most critical factor is the contraction in volatility. It's not going to last. A breakout above the resistance cluster around $73.50 on high volume would be a very strong bullish signal. On the flip side, a breakdown below that key support at around $67 would be very bearish. Second, monitor the volume flow. Pay attention to indicators like on-balance volume. Right now, the slope is negative. You want to watch for a reversal, for more volume to start coming in on up days than on down days. That's your early sign that big money is starting to accumulate shares again. Third, catalyst dates are key. The upcoming Fed meeting is the most immediate one. After that, the next earnings report will be the real test to see if these new strategies are actually working. In conclusion, the technical data confirms that PayPal is a show-me story. The chart is waiting for the fundamental story to give it direction. This period of quiet consolidation is the market holding its breath. The resolution, when it comes, will likely be driven by the economy and by the company's ability to execute on its new vision. If you found this breakdown useful and you appreciate a straightforward, data-driven approach, I'd be grateful if you'd subscribe to the channel. It makes a huge difference. Alright, that's all for today. DataCat out. Stay safe and stay sharp out there.